Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. FOMC decision is out and the Fed held interest rates at its target range of 4 quarter, 4 half. Now, investors in this meeting were also closely looking at the commentary by the Fed chair and derive any hints to assess how the monetary policy might take shape. Market reaction was quite subdued, with currencies holding on to their broad ranges. And now, of course, the focus will turn toward the ECB meeting today. So let's understand what's in store. Good morning, JK. What's your take on the Fed meeting and Mr. Powell's tone? Also, your expectations with respect to the upcoming ECB meeting.
Hi, good morning, Swaraj. I think we are now, or at least in the starting yesterday for the next 2 days, we'll be watching what the central banks do. And of course, yesterday we had uh, two central bankers meeting. In fact, three, I would say. Bank of Canada cut rate by 0.25%, and this was the sixth move by them. And of course, they are keeping door open for more cuts going forward because of the economic challenges as well as the challenge that may come through the Trump tariffs. Now, uh, while that was taken in the stride as a well-expected move, Fed meeting, of course, was in the focus of traders. Rate decision at unchanged, at 0.25 to 0.5, 4.25 to 4.50 was well expected, but all focus was on what Trump was going to say about the future, expectations as well as his response to various policy decisions of the Trump government, and in particular about Trump calling for lower interest rates. Now, before that, there was a small change in the Fed statement this month, which said they said that indicators such as economic activity has continued to expand at a solid pace. Unemployment rate has stabilized at a lower level in recent months, and labor market conditions remain solid. Inflation remains somewhat elevated. This was slightly more hawkish than the last month's statement, and the because last month they did indicate that the unemployment rate has moved up but remains low. So this was seen as a hawkish statement, and the market had a negative reaction in the bonds, and the dollar index also went up. As Powell began his speech, he actually clarified it was just a tweak in the language, and there was no real substantial or change in the stance that the Fed is taking, that it's a neutral and they are data dependent. They will look forward to the evolving situation on inflation, and they are attentive to risks on both sides of the mandate. They will adjust the policy not in a hurry, and they will not be on a preset course as well. He also mentioned about two good readings on inflation, and further progress on inflation is also what they are looking forward to see. Now, then the next reactions were on what the Trump said about the interest rates having to come lower, etc. So he was very categorical, and he handled these questions with the calm firmness as evident, from these statements, like, not going to comment on what the president has said. Public should be confident that Fed is keeping their heads down, doing their work. Committee was in the mode of waiting to see how the policies are enacted, and will not speculate on what lies ahead. So basically, he's not giving what any major reaction to the statements from the government as well as from Mr. Trump. So they seem to be patiently waiting and watching, as well as to understand what the policies were. So the investor did not get anything new. The yields which had jumped up has come off. Dollar, which had also jumped after the initial statement, also came off. So not much change has been seen in both of them. The stock markets also were negative, no doubt, but not really building on those bearish move as after the Fed statement. Now, of course, the third central bank move yesterday was the move by Brazilian central bank to hike rate for the fourth time. And now they have hiked the rate by as much as 2.5% from the low. That they are fighting high inflation once again. Now today we have the ECB meeting, which will be obviously cutting rates by 0.25%, and more rate cuts are expected from ECB in this year. Some expectations going even below 2% in this cycle, but I think the ECB will remain vigilant to inflation resurfacing, and their statement will definitely be towards quite a nuanced approach of being data dependent. And of course, the growth picture which they will project will be what the market is looking forward to. At least two more rate cuts are definitely on the horizon. How it goes moving forward will definitely depend upon how the inflation and the growth picture evolves. And the latest statement that we have heard from, we have been understanding from the market is about Australian Central Bank planning to move the rates lower on in February. And this has actually supported the Australian stock index, which has made a new all-time high. And of course, we also had another central banker yesterday. That's Miss Reeves from UK Finance Ministry. She was laying out fresh plans for UK's growth, and even pointing to specific projects that the government is going to pursue, of course, without sacrificing their focus on fiscal. So quite a lot of things to digest. So markets are actually now in a holding pattern, awaiting more data like GDP today, which is likely to be strong. And the inflation number, the PCE core inflation, if you go by what the monthly CPI, came out, it is going to be not much of a difference month on month. May is a bit, because of the oil price. And so, not much takeaway again for the market. So they will be waiting to take directions probably from more statements on the tariffs. Speaking of tariff, yesterday, there was some reaction on the Chinese AI development, where the Treasury Secretary, sorry, the US official was actually pointing to China, actually using this as a salvo ahead of the tariff that is proposed by, US, and also they are talking about China having actually used the US technology for developing this new product. So market has been now in the suspense about how to take this new development on the deep seek. But definitely, stock markets in US seem to be slightly on the side of taking more profits on rallies. This is quite logical because it has had a massive run in 2024. On the currencies, euro finding good support near 1.04. I think that will stay till at least ECB decision, depending upon what they speak about the future guidance, and also on what statements we get from US for the direction. Important support is 1.0350 breakup, which will probably be revisit the lows, and on the upside 1.0550. UK pound got supported because of the Reeves statement on specific growth plans. The surprise mover has been Japanese yen, which actually surprised me by going weaker after the BoC rate decision of hike. But since then, it has been steadily coming off. Today, it has broken the 155 levels, also possibly reacting to the lower yields in the US. I mean, the yields holding at the lower levels, and also the some sort of a risk off in the US markets is possibly the yields as well as stocks in the US are headed lower. 4.45 on the 10-year is something to be closely watched, and a breakup that can take the yields much lower. On the rupee, we gradually moved to the top end of the range at 86.60. Again, the demand on the dollar rupee on dip has been quite strong. The important thing driving this is also the big fall in the forward premium, at least on the 1 year, where it has fallen from about 2.73% to 2.13%. I mean, 2 rupees 35 paisa to 1 rupee 85 paisa, and that's a big fall. So the spot remaining in the range and the forward premium falling is attracting more hedging by the importers, and so that could continue for some time until we see a clearer direction. But definitely the FI number continues to be negative, persistent demand, and who knows if RBI cuts rates in their meeting next week, we could see a new high in the USD INR as well if the dollar index is still remaining on the elevated side. So while we are not seeing too much move currently, I think there is a potential for bigger moves looking at the events ahead, both in India and also abroad. Thank you.
Thank you, JK. And just quickly summarizing, yesterday there was a Fed meeting and the rate decision was rates were kept unchanged. Small change in the Fed statement. The statement was slightly more hawkish with respect to the statements on inflation and unemployment. Yields had cooled. Dollar, which jumped initially, also cooled as well. We have the ECB meeting today. The statement may be data dependent. Markets are largely pricing a rate cut, but they will also be cautious given the uncertainty with respect to the political developments in the US. Data today, of course, we have the US GDP data, and it is expected to be a stronger print. For rupee, we gradually moved to the top end of the range at 86.60. Saw some appreciation later in the day, which was used by importers and got some good dollar demand. Fall in forward premium seems to be also attractive for the importers. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.